Okay, good afternoon. Good afternoon, everyone. Can you all hear me? Hi, guys. Good afternoon.
Yes, we can hear you.
Okay,
Yes,
thank
Doctor.
you. Thank you, Prof. Okay, right. So, welcome everyone, okay, to today's webinar, right, organized by the School of Economic Finance and Banking. So, I'm the moderator for today's webinar. My name is Dr. Wong. So we are honored to be able to invite Mr. Lim Chi Yao, okay, to be our guest speaker today for the topic entitled Corporate Bond Issuance Process in Malaysia. Okay, so let me introduce our speaker today. Okay, so let me move to the next slide. Right. So Chi Yao, okay, Chi Yao is our alumni. So he graduated from UUM in year 2017, okay, in Bachelor's of Finance, okay. So he's our first class, okay, degree holders, right. So right after graduated from UUM, Chi Yao began his career in Hong Leong Investment Bank, okay, in the debt capital market department, okay, from 2017 until now. So almost 4 years, right? So his job, okay, his job is to help company to issue bond, okay. So that's why he's the best person, okay, to to talk to us, okay. What is the process like, okay, when company want to issue bond in Malaysia? So below is a list of transaction or deals that are completed, okay, by Chi Yao and his team, okay. So if you look at the numbers, okay, it's about 37 billions, okay, ringgit Malaysia's, okay, over the past 4 years, right? So most of the audience today, I suppose, are our corporate finance student, okay. So when we talk corporate finance and also financial management, we learn about bonds, right? Public bond, whereby public bond is an important source of external financing for big corporation beside equity, okay. In fact, Bank Negara Malaysia statistic in 2020, okay, just last year, shown that up to 94%, okay, 94% of total external financing raised by companies, okay, are in the form of bond, not equity. So I suppose this statistic can motivate us to know more about bond, okay, how does it work, okay, what is the process like, okay. So and again, so the best person to share with us will be Chi Yao, okay. So with that, I pass back the screen to Chi Yao, right? So
Okay.
Chi Yao, you can take over the screen and show your presentation slide.
Okay. Hi, everyone. Good afternoon. Can you all hear my voice clearly? Just
Yeah.
want to test my mic. Okay.
Yeah.
Okay. Thanks, Dr. Wong, and for the introduction. So without wasting any more time, I'll just share my slide first. You all.
Can we see
Just
your
give me a
handsome face,
second.
Chi Yao?
Yeah, I just showed it.
Yeah. Okay. Can.
Okay. So I'll start sharing my slides first. Okay. Can you all see it?
Yes. Good.
Okay. So, okay, to start, okay, let me introduce myself first. My name is Chi Yao, and you all can just call me Yao lah. I am currently working in Hong Leong Investment Bank, debt capital markets, to basically work on bond issuance lah. And my current title is assistant manager. So, okay, come to my second slide. This is the disclaimer. Actually, I just want to clarify today. These slides and all these oral briefing that provided by me is actually just solely on my own individual capacity. It's not related to Hong Leong IB. I'm not representing Hong Leong IB to make any statements or any opinion lah, basically. Okay.
Chi Yao, maybe you turn on your slide to presentation mode.
Okay.
Yep.
Okay. So investment bank, because I'm working in an investment bank, and I think for all the juniors here, I think most of you are still may not be able to differentiate what is the operating activities for an investment bank and also normal commercial bank. But before this, Dr. Wang, please feel free to jump in if you think that anything that I need to clarify or elaborate further.
Okay.
Okay, so what's the difference between a commercial and an investment bank? So I'll start with the commercial bank first. For commercial banks, usually that's what we can see on the street that usually when we want to apply for a car loan, property loan, or even making an FD placement, then usually we will go to commercial banks. But investment bank, we are it's not slightly, we are actually quite different from commercial bank because what we are doing here is our client is more on is the corporate sector. We are actually servicing the corporate clients. So of course if we are saying that we are sorry uh can you all still see my screen because I think something just
Yes, someone have just taken over your
okay,
screen
but
accidentally. I think you need to share again. Jiao, you share, click
okay.
share. Yep.
Yeah, okay, never mind.
Mhm.
Okay, I'll continue first. So because we are servicing the corporate client, so of course we seldom will take FD or what to make deposits from from the clients lah basically. So what we are helping is actually we are working on corporate proposal. And what are these corporate proposal? Of course we have say because for corporate we have corporate structure capital like we have equity and also the debt side. So basically the corporate proposal here we are saying is those we are referring to maybe IPO and this bond issuance lah. Of course is for if it's for that. So yeah, so corporate proposal is because this corporate proposal is not something that it can be done by a commercial bank. It must be done by investment bank because investment bank here we are actually playing a central role. We are actually the principal advisor for all these corporate proposal. And in order for those corporate client, of course, when the client come to us, they will need funding. So it's either they will choose for equity funding or debt funding. So because I'm working in that capital market, so mostly my job is to structure and bond issuance and issue bond basically. Okay. So just now I said because this corporate proposal, we will need a principal advisor to submit it to the regulators because the corporate itself, the client, they cannot do it. Yep. So that's why investment bank here is a must lah. I mean, is a party that must be appointed to do all these corporate proposal. So hopefully you all can understand or try to differentiate what a commercial bank and the investment bank doing here. So okay, for an investment bank, right? This is basically a common structure you see in the investment bank. So of course, if you listen to your other seniors, maybe they say if they join an investment bank and they may be a remiser or they are a trader, then most likely they are actually under the stockbroking division. Of course, their job is different from us, the investment banking division, because they will be focusing on more on the trading side. So my job is starting to do with stock trading. So if you say you want to have any advice on stock or what, that one I cannot provide because we are the one who are working on the corporate proposal side. We are submitting proposal and help the client to implement their proposal. Basically, we are the execution side. So I will just focus more on investment banking division because this is where my department sits in. So for an investment bank, this investment banking division usually we have main 4 business units. So the first one, of course, you can see this is a treasury and markets. So treasury, this inside here we have a few units. Of course, their job is basically they have buy side and sell side. The buy side, which means they are acting like a fund manager. They will try and see what are the things that they can buy like a bond with a good credit structure, they will do their internal evaluation and see whether this bond is good to invest. This is the buy side lah. And then the sales and distribution, this is the selling side that I'm referring to, because the bond or the other structure, what should I say? The other products that we have structured and we issue, of course, we will need to sell to investors. And who are the buyers? Then it can be those funds, or it can be from the treasury side here. So if they are the one who are buying, the buyer, they will evaluate. So for the sales sides, after we have structured and we want to issue the bond, we will need to go through the sales and distribution unit. So they are the one who are also helping us to market it to the potential investors in this case. And then equity markets, the corporate proposal they are doing is basically what you can see commonly in the market, like IPO or rights issue, bonus issue, all sorts of equity related proposal lah. So they will need to go through these equity markets. And debt markets, this is my department. So mainly we are actually helping to structure the bonds and issuance lah, the execution part. And then client coverage, this is basically a team that they will help us to look for potential clients, because we are the execution team. For origination, this department, or rather this unit, they will be the one who will actively seek for those client who need financing, or they will need a corporate proposal to raise financing, either debt or equity, basically. So basically, this sums up the investment banking division, the main business units that we will have. This is the main income generator lah, basically for investment bank for this division. So if there's nothing much more, I'm not sure. Dr. Wong, you want to ask anything from here? If no, then I'll just proceed to the next slides.
Yeah, you can proceed. Yeah.
Okay. So industry overview. So because I'm from that capital markets, more what I will be sharing today here will be more on the bond side lah. So for bond, okay, maybe just let me open this file to show you the overview, like how do we see which investment bank is performing, or the overall industry issue, how much bonds has been issued for that year. Hang on. Oh. I'll need some time to open this file. This is the league table. Share it first. Okay, here you go. So this is basically league tables, and this is published by Bond Pricing Agency Malaysia, which is also one of the player in bond markets. But they are more like a Bloomberg. It's like they will collect all the data and the bond issuance, and basically also you can treat it like a Bursa kind of organization. They will have all the data and all the pricing showing in their website. So this league table is actually all the issuance details that they have compiled from 1st Jan last year for the full year of 2020, basically. So for us as a principal advisor, investment bank, what we are actually more important for us, or rather performance or result for our bank, is we will look at this top lead arranger, because here it will show overall in this Malaysian market which banks have the most issuance, or rather the issuance size, the highest, and then we'll see from there how much market share that we have for the particular bank. Search. Okay. So as you can see, this category is for top lead arranger. And for last year, the first ranking is CIMB Investment Bank, followed by Maybank, Kenanga, and then Hong Leong Investment Bank. And this column showing the total amount of issuance that we have done in the last year.
So
So
numbers of stock. I'm sorry. Yeah. Numbers
Yeah.
of stock is what? Numbers of company, is it? Number of
This
issuer.
is actually number of stock codes that we are referring to, because like for an issuance, maybe this part I'll come to details also later, because for an issuance, it can be issued in multiple tranches or multiple classes. Like say for 100 million of issuance, we will have class A, class B, class C, maybe 20 million for class A, 30 for class B, and the remaining for class C. So by having different classes or maybe series with different maturity or issuance date, you have different stock code for that. So which means these are the total number of stock codes, or rather series, that they have created for the last year.
Okay.
So yeah, but that one, regardless how many stock codes that you have issued, but if you sum it up, it will still be equal to your total amount of issuance. So we'll just look at this category, this column we'll do, the first column, amount issued. So for the last year, the total bond issuance amount is actually 44 billion. This is in million actually. I think this is in million, 300 million, and then 1 billion, 5 billion, 15 billion. This is 44 billion in total. As compared to the year before, 2019, I think we have dropped a bit because here we have 59 total number of issuance, because to be honest, because right now the interest rate environment is quite, or rather the COVID situation, we have a different kind of factors here, but mainly is our industry also get hit by COVID situation, because many corporates, they it's a bit hard for them. It's not that they don't want to issue bonds, but the problem is they may not have enough demand in the market, because if even after we have finished structuring and we have launched the program with SC, and when we come to marketing, maybe there are seldom investors that they can take up the bonds. So because of that, many of the clients, they try to wait and see what's the COVID situation, the updates, and what will it be in the future. Then only they will decide whether they want to issue or not. So that's why for the last year, and actually this year also, we have experienced some decrease lah. The amounts of deals that we need to execute has actually been affected also lah, because of this COVID. So yeah, you can see these are the ranking of the bank. So for those if you want to join an investment bank and you want to of course you want to see more volume, you can try to aim CIMB Investment Bank or maybe Maybank, because there's quite a lot of their deal flow is quite strong, because they are almost the top arranger already lah here. Usually it's just these two banks lah in the industry. Ours, Hong Leong IB, is always like the number 3 or number 4. We are just we are just number 3 or number 4 lah usually. And this is this comparison between the years is just to show you overall how it has been changed from year 2019 and 2020. Yeah. Oh, hang on. I think I've seen something pop up from the chat box. Okay. So all these this is the main thing that we will look at for league table. So for an IB lah, basically this is our performance and result after all for the particular year. So I have attached a link inside. So perhaps if Dr. Wang, if you want to share these slides with the juniors, maybe you can show them, and then they can see this lah.
Okay, I already shared with them, in fact, without your permission.
Okay. Okay, so I think I'll just stop it here, because this league table, that's the main thing that we will look at lah. And basically it will just show how the markets is performing for the past 2 years. I'll back to my slides. Okay. Okay. So this is the main thing because as our title say, it is basically my sharing is more on the corporate bond issuance process in Malaysian market. So before I go to the the main content, I just let you all to get yourself familiar with all these abbreviations that we usually use in the industry. So there are a lot of players in this industry. Of course, we have these regulators, BNM, SC, and we have different parties like valuer, credit rating agency that we need to deal with. So basically, these are the commonly used abbreviations that in this industry lah. So BNM is Bank Negara, DDWG is the Due Diligence Working Group. As I said, this corporate proposal will need to be submitted by the principal advisor, which is the investment bank being appointed. So before we do any submission of the corporate proposal, we will need to form up this due diligence working group. And inside this working group, of course, the main parties will be issuer and us, the PALA, and then we have the solicitor. Solicitor here is actually the legal or the lawyer that will be advising us, giving legal advice for the transaction. And of course, if there's any other parties that we think that we need to include them, we will invite them to join in this group. So basically, this group is to make sure that all the submissions to the regulators, all the information and the details are true, correct, and there's no misleading or material omission. That's the main thing that we need to ensure lah. It's just like an auditor. Their main job is to make sure their opinion is true and fair, similar kind of thing. Okay. So sorry, I think I have seen some pop up from the chat box, but maybe let me finish all the things first, then we'll come back to those questions, then I'll address it accordingly. So FA is actually a facility agent. They will be helping us on the stock code creation, the stock codes that I mentioned just now. Before issuance, we need to create stock codes representing the series of the issuance. So facility agent, this will be the main parties helping us to create all these thing and also to monitor, to calculate the profit payment or the coupon payment. Information memorandum, IM, this is actually a disclosure document that we will need to prepare. Basically it's a marketing documents lah, because after we have finalized the terms and condition for the corporate proposal, then if we need to market it to the investors, we need basically these disclosure documents to show basically inside this we have the background information of the issuer and then the transaction, terms and condition of the transaction, and also some risk factors that we need to we need to alert them. If let's say they need to invest in this bond, this is the risk that they will need to take up and they will need to be aware. And similarly, this IM is actually verified by the DDWG before it's get issued. So in this IM, we cannot find any things that is, in other way, we need to make sure all the material, all the facts, all the information stated in this IM is true, no misleading information, and there's no material omission of any facts. Okay. So yeah.
Is this the equivalence of prospectus in IPO?
Okay. You can treat it that way, but prospectus is more for equity side IPO, and it is actually more comprehensive than an IM. So you can treat it as a disclosure document also, but it is like the same. They serve the same purpose, but the content is not as comprehensive as a prospectus lah, I would say. Okay. So LA, lead arranger, basically we are, an investment bank. If we are being appointed, usually we will be appointed as the PA, the principal advisor, the lead arranger, the lead manager. So we have different roles here, and of course each of the role they have different responsibility. For lead arranger, we need to make sure that it's basically we are the one who, the role of a lead arranger is to structure the bond basically. Is more on the structuring side. We need to make sure there's no gap. Everything is covered nicely. There's no gap, no cash flow leakages or what from the structure when we do the structuring thing. LM is more for like distribution stage, lead manager. Because just now I said this IM, we will need to blast it out to the investors, and basically this will be done by the lead manager. So they will be the one who will be liaising with the investors to get their commitment to subscribe for the bonds. So this lead manager, because just now I have also mentioned in our treasury, we have a sell side, a small team who will helping us to sell the bonds to the market. So they will actually be the lead manager kind of thing. Like they will take up this role to help us to liaise with the client. Oh, sorry, the investors. So LOC, this is basically a letter of commitments that we will receive from the investors, because after the treasury team or the lead manager team, they have signed it out whatever the required disclosure documents to the investors, and then the investors, they will actually process the credit of the transaction. They will get approval internally, and then if they are okay with credit, they will say they are okay to subscribe for the corporate bond. But we will need a black and white from the investors to say that they are actually subscribing it. So here comes this LOC. Basically, it's a black and white from the investors to say that they will subscribe for the bond. And following, okay, the one next is the Lodgement Kit. So a corporate proposal, we will say we will need to finalize all the terms and conditions, and actually we will need to submit to the regulators. And basically what we are submitting is this Lodgement Kit. This is basically a submission package. Inside here we have the final PTC. The PTC stands for the principal terms and condition, basically all the terms and condition for the bonds, and then other information, maybe the issuer's background and whatever supporting documents. If let's say it is Sukuk, is an Islamic bond, then we will need to get another approval from SAC, the Sharia Advisory Council. Then with all these documents, with the complete supporting documents and everything is final, then we will submit it to the SC. And that's why this lodgement kit is actually to be submitted or to be lodged by the PA, the principal advisor. Only the investment bank being appointed as the principal advisor or the lodgement party can do this. The client itself, they can't just submit whatever proposal they would like to the regulators. They will need to mandate us to do so. So the following is the Lola Guidelines. Basically, when we do all this corporate proposal, we have a lot of guidelines to need to be complied with. And of course, when we are structuring, the main guidelines that we will be referring is these Lola Guidelines. Lola Guidelines stands for these Guidelines on Unlisted Capital Markets product under the Launch and Launch framework. So of course, when we structure, we'll need to make sure there's nothing is in breach with these guidelines. Otherwise, of course, we can't. Otherwise, is either we will seek for an exemption or variation from the SC, or we cannot put that thing or put that features inside the bond itself. We can't have that structure which is not compliant with the guidelines. And this is I would say, all my seniors, they will say this is the bread and butter for that capital markets lah, because this is the most important and most commonly used guidelines in DCM, that capital markets. So if you really interested to join in that capital market team, I'll really recommend you to go through this and at least take a look, and you will see there are many things that you need to learn basically. Yeah. So as I explained, this is PA, one of the role that will be appointed to do the submission to the regulators. PTC, the terms and condition. SSC, one of the regulator from SC, basically to review the Sharia structure of the transaction. SC, Securities Commission Malaysia. This is the most frequently regulator that we will need to liaise with as a PA. So, okay.
Chiao, I'm
Sorry?
sorry.
Yep.
I need you to enlarge your screen, turn presentation mode.
Oh, sorry,
Yeah,
I forgot to do
because
so
we have
because I
the
need to change.
yeah.
Yeah.
Okay.
Okay. So, okay, for a corporate bond here, usually we will differentiate it into two categories. One is retail, another one is Lola. So retail basically is a bond that after we have structured, it is being offered to individuals. It's not like those sophisticated investors. It's not from fund. So for bonds that are being issued as a retail bond, the target investors is individuals like us, can be anyone. Okay. So if it's issued under the Lola guidelines, that the just now the Lola guidelines I have mentioned, basically is targeted to be those sophisticated investors who are mainly those high net worth individuals or fund managers with extensive financial knowledge. They know what they are buying because sometimes bond can be structured in a very complicated ways. And SC, they are trying to protect the investors or maybe the retail investors because maybe it's something that is very hard for them to comprehend. They may not know what are the structure and what are the risks that they will be investing in the bond. So that's why we have these two different kind of bond, one to retail, one as a Lola. Okay, so of course, under both retail and Lola, we can issue Islamic and also conventional bonds. For Islamic, of course, we will address it as a sukuk. For a conventional bond, it can be, and we can call it MTN, we can call it whatever name we can define it. But yeah, basically there are these two types of bond, still sukuk and a conventional bond. Maybe we'll go with this retail first because as I say, as he try to protect the individual, the retail investors. So if we are going to issue under this as a retail guidelines, retail bond, we also need to adhere with another guidelines which call the retail guidelines lah. That one also there's a list of things that we need to comply with. But mainly what I'll need to explain to you all is if we are going to issue a retail bond, this box, these are the main thing that we will need to consider. So, and basically this must be the feature of the retail bond itself. So it must be denominated in RM, it must be issued in RM, and with a tenure of more than 1 year. So fixed term with principal and any accrued interest as usual, we will need to, of course, it will be very clear cut with an issue date and how much coupon or profit rate that we will be issued at, maybe a 5% per annum, and then it is a straight bond. It can be 5 years or 10 years. So long it is more than 1 year, then we can issue it. Oh, sorry. And yeah, this interest profit must be paid periodically because some of the bonds they may issue at without a coupon. It can be issued at discount. Then the investors they will just make profit or the issuer rather they will just receive a discounted issuance proceeds but will need to pay at the par when the bonds comes to maturity. But in this case, we we usually seldom do that lah because we just make it everything very simple, straightforward. We will give an interest rate and then we will set what is the maturity date for the bond. So rank at least equally with unsecured and unsubordinated creditors. This is also to protect the investors just in case if let's say the bonds is in default, then they will have the first claim to they will have the first claim on the asset first and then does not embed with any swaps, options, and derivatives. So of course, to make sure it is not so complicated, mainly to protect investors lah. Save an asset for those convertible and exchangeable. Because those retail bonds that we are issuing, usually it is issued by a listed company in Malaysia. And usually it will come together with maybe a bonus issue or rights issue. And then usually the bond itself is convertible to the shares. The underlying assets is actually the shares of the listed company lah. Okay. I hope for now this is clear for everyone. So we'll come to the Lola side. So same for Lola bond, for a bond issued under this Lola framework, it can be ICP, I mean, CP means commercial papers. It can be medium-term notes. It can be ABS, or maybe a capital instrument issued by a banking institution for their capital requirement. And as you can see, those green bonds, social bonds, which are very quite popular recently, and Asian sustainability bonds and Sri Sukuk as a normal bond. But the main difference here is this kind of bonds issued under Lola, their structure can be much more complicated than those issued as a retail bond. That's the main thing. And there will be more even different kind of structure that you will see in the market though for those which are lodged under the Lola. Okay. So of course, I would say for Malaysian market, it's not 100%, but maybe 90 or 95% of bonds, they are issued under these Lola guidelines. That's why I mentioned that the Lola guidelines is very, very important for our department, or maybe for DCM person, because most of the bonds that they are actually really issued under these guidelines, and we need to make sure that we are in compliance with that. Okay, so maybe I'll just come to details for this type of instruments or type of corporate bonds that we are going to issue, we can issue. So CP, because I think in your textbook, we usually will say we will have short term, we will have medium term and long term bond instruments. So for short term instruments, usually we will say an instrument, that instrument with a maturity date of less than 1 year or 365 days, then it will be regarded as a short term paper. Then usually we'll structure it as commercial papers. So the issuer actually, they can issue for up to 30 days, 60 or 90 or whatever, how, I mean, as they would like, so long it is below 1 year. This is for commercial papers. So these commercial papers, usually they are issued just to fund for the working capital requirement of the issuer. And medium-term notes, okay, for this medium-term notes, it's actually most commonly issued instrument in Malaysian market, because whatever I mean in Malaysian market, the industry norm is so long the bond is issued with more than 1 year, we have the tendency to call it a medium-term note. Be it is a 30 years or 50 years tenor of bond, we will just define it as a medium-term note. So you seldom, or you can't find any bonds that we call it as a long-term notes. So most likely it's a medium-term notes lah. And ABS, asset-backed securities, basically this is also a kind of the MTN, but just that the main difference here is MTN, it can be a very strict, it can be a strict bond, a plain vanilla without any complicated structure, just like a normal financing. But this ABS, right, we will issue these medium-term notes to securitize an asset basically. And these assets, basically, if you need to generate cash flow itself, then thereafter we can use the cash flow generated by the asset itself to service or to pay the coupon from the bond basically. So it is like a self-sustained structure. We will issue an MTN to buy over an asset. So after we have bought the assets, we will use the cash flow generated from the assets to service for the coupon payment. So of course, for this kind of structure, as a PA or LA, we will need to assess the cash flow of the assets. The assets can be a property, a retail mall, or maybe a receivables, something that it must be generate cash flow. Otherwise, it cannot generate sufficient cash flow, then we will not able to use it as an underlying asset to proceed with the structure basically. And then capital securities, as I mentioned, this is something that usually a banking or FI of insurance institution, they will need to issue, because I'm not sure for risk capital management classes that you have attended, we have all these Basel requirement, Basel 2, Basel 3, basically this is to protect the FI from failure basically. So they will need to make sure they will need to raise enough capital securities to serve as their capital buffer if in case there's any major uh, major negative events that happen in the industry lah. This is to protect the bank itself or the insurance company itself. So ESG, environmental, social, and government bond. Basically, these are something to do with social bonds. By issuing these kind of bonds, maybe you can use the proceeds to maybe to do something green, or maybe your project itself. If you say you want to build a building and the building itself is using green technology and it can reduce carbon emission, then it can be regarded as a green bond, basically. Something to do with that's something that we can which can generate positively to the environment or to the social, then it can be regarded as this social and green bonds. And then lastly, the retail bonds, as I've mentioned, this is the most simpler. It's not most simplest. It's something that must be with a simple structure that being issued to the retail investors. Okay. So what we'll be doing more is these first few categories kind of bond from a DCM team. Okay, main players in the bond issuance process. Of course, the main player here, the investment bank, being appointed as a PA, LA, LM. We are the main parties here. We are picking up the central role. We need to coordinate everyone to make sure everything is made available and to do the submission with the regulators, to deal with the regulators and make sure the issuance go through. So solicitor here, mainly they are helping us to draft all the documents and also helping us to basically advise us what can be done and what is in breach of the guidelines or maybe other laws or regulation. FA team, the facility agent, helping us to with the coupon payment and those stock creation kind of things. Regulators here we have BNM, SC, and SAC. BNM here, usually we will need to seek approval from BNM is something to do with if let's say we want to issue something that is denominated in foreign currency, then it is under the governance of BNM. They are covering this field, so we'll need to seek an approval from them before we can proceed to do the submission with to the SC. SSC, of course, they will be reviewing our Sharia structure or principle if let's say we are going to issue a sukuk. Rating agency, this is optional, depending on the structure of the bond. Sometimes the issuer, they want to get their bonds rated just to make sure, I mean, some investors, they can only invest in bond, and basically it's more for investors, a larger investor space, or to suit the investors' requirement to make sure they can sell it to the investors. And it's also something that they can assess because this credit rating agency, at the end of the day, they will assign a rating to the bonds or to the project or the issuer credit strength. So from there, the investors, they can roughly gauge or they can do their internal assessment to see whether this issuer is credible enough or whether the credit structure of the bond itself is good enough to make sure that the issuer, they can pay off their debt, their coupon, also the principal payment. Okay, so this is the main thing that we need to basically we will need to share. I'll need to share with you all today the overall process. So for a bond issuance, basically we'll break it down to these three stages: the origination stage, execution, and finally the issuance. So this is a general overview, like what will need to be happen during this stage before we go to another stage. So from origination here, we will break it down like pre-mandate, before we are being appointed as the PALA for the transaction, or even before we form the DDWG for any submission to the regulators. So we have pre-mandate stage here, and post-mandate, what we need to do. And then with all these things, being completed, or then only we can advance to the next stage, to basically to seek for approval from SC. And then after the approval from SC, we'll start marketing. And then with marketing completed, we have received enough LOCs, all the LOCs from investors, then we can only proceed with the issuance, provided that we have meet all the conditions precedent. And after issuance, there will be just some administrative work that will need to be done. Basically, reporting to SC about the issuance details lah. Okay, so we'll go into details for the origination stage here. Yeah, this one we'll need to relate it back to the structure that we have for an IB, because during this origination stage, we as a DCM team, basically we are not depending on the bank structure also, their allocation of work. Because my bank, we do not need to go and seek for client, because that will be done by the client coverage team. So at this stage, they will be the one mainly to go around the markets and see who are the, or which are the corporate they will need funding. And then of course we will do the pitching, we will help on the pitching, and then we'll submit our proposal for the clients to see if this structure is good to them, then they will only proceed to mandate us. So our job here as a DCM, or rather, I mean, as an IB here, we'll proceed. Of course, we will have to pitch our proposal to the client first. Basically, this pitching will have the salient terms ready. We will have a rough idea of the structure and the terms, what will it be, to suit the client's need, their financing needs. So pitching here, basically, we will have the PTC, not the full one, but just the main key terms that we will need to nego with the client. We'll get it here ready for them to review and for them to assess internally. And then at the same time, of course, because of all those compliance requirement that is being needed, so internally, we of course we also need to complete a KYC process, basically know your client, because you need to know whether the client is in a proper business or whether they are involved in any money laundering activities. We need to make sure the client is clean. Then only we can onboard them, basically. And okay, cash flow evaluation or modeling, because the client, they need funding, and then of course for us to structure something for them, of course we will need some basic information. And during this stage or the pitching stage, the client actually, they will feed us with the basic information. Maybe they will give us a brief explanation or brief description of their project, what are they trying to do, and then maybe if there's any cash flow, they will provide us also. And then we will help to assess the cash flow and see whether the cash flow is good enough, whether it can support the transaction, or there's anything that we need to be added to strengthen it. So we will need to assess the cash flow. And here, also depending on the, case by case basis, some of the client, they may just have a raw data which they will just feed you the cash flow, a simple cash flow, but internally ourselves, you need to create a model to basically to reflect the whole situation, because as a PA, we will need to know what are the things that we need, and then what are maybe the expenses or whatever obligations that the issuer will need to be met. Then we will input it into the cash flow, and then most likely sometimes you need to model it ourselves. That's why I think during my uni time, I think I've also attended this financial modeling course, and actually that one is very important. It's quite useful also, because by learning this, you need to know how to do all this linkage, formula linkage, and then these modeling skills, how you want to present the cash flow, everything. Because yeah, this is very critical, because without a good cash flow, it may not reflect the real situation, and then your transaction may just go fail like that. Okay, so after we have evaluating all these, we have prepared the salient terms, and we have evaluated the cash flow. If we think that this is something is doable, we will propose a financing structure to the client, and then it's up to the client. They will assess it internally. and then of course they will give us an answer lah. After that, whether they will mandate us or they will just mandate another bank for this transaction. And of course, we also engage with the relevant professional parties, because parties that are involved, there are too many. Because for structural, we will need to seek legal advice from the solicitor, because some of the things that it may in breach with other guidelines that we may not know. So, or maybe that is silent, that or it is uncertain, we'll need to check with the solicitors. And also, if let's say the client, they will tend to go for a rating, then of course we need to approach the credit rating agencies also, because the credit rating agencies here, they are actually they are like a independent party. They will also like review the structure, everything, before they can assign a credit rating to this transaction or to the bond. Yeah. So this is everything here will happen during this pre-mandate stage lah, I would say. So if let's say the client is okay with the proposal, then they will of course proceed with the appointment, the mandate. The mandate that I'm saying here is actually the appointment, but in industry we usually will say that we'll get the mandate, which means we'll get mandated or appointed as a PALA or LM. So after they have say yes, of course we will proceed at full force. We will start to engage all the parties that will need to firm up their appointment. Then only we can form up the DDWG. And before we start off anything, of course we will kick off. We will need to basically in this DDWG kickoff meeting, we will have a basically it's everyone, all parties will have representative to join this meeting, and then we'll go through the timeline and what are the things that is expected to be done in this period, and then yeah, everyone will start working towards it and to settle their own deliverables lah, basically. And of course, when we have kickoff, we also need to start the due diligence exercise. This due diligence exercise, usually we'll call it a legal duty. It will actually, for this process, usually the lawyer is the one who will need to go to the issuer's office. They will need to, for a legal duty, they will review all the contracts that that has been ended by the company, because we need to make sure there's nothing that it will that will affect our transaction. It's like if let's say at the end of the day, if let's say if we don't do any duty on the issuer, if let's say there's really something happened behind, let's say someone is going to file a claim, or they are involved in a litigation, a very material litigation case, which makes issuers going bankrupt, then it will be something very bad lah, because if we don't do any duty exercise before. So we need to make sure the client is really good to go, the issuer is really clean, they are able, there's no winding up, there's no bankruptcy filing, everything, then we can only proceed with the lodgement and also the issuance of the bonds lah. So due diligence here, mainly is the lawyer. They will start to review all the legal documents or contracts that's being entered by the company itself. Okay, and us, of course, eventually they will, after they have finished reviewing everything, they will generate us a due diligence report. And us as of course also the DDWG, all parties of the DDWG, they will need to review on all these documents, because for a DCM person, our job is mainly if we were to give a ratio of to show what are the things that we need to work more, is actually more on the documentation side. We are dealing more on drafting of those wordings being documented. So it's like 70% is reading and commenting on documents, maybe only 30% on cash flow or those dealing with numbers, from my experience. Okay, then after we have completed the due diligence, of course, this is the main thing. Concurrently, we will need to finalize the cash flow with the parties, the terms and condition, and to finalize this lodgement kit, basically. Because with this lodgement kit, all the information, the finalized information, then only we can lodge or we can submit it to the SC. If I say lodge, right, which means of course, definitely it will be issued under the Lola Guidelines that I've mentioned. And then the lodge, right, is actually referring to we will need to key in the information, the terms and condition into the system prepared by the SC. Then we will need to click, to submit in via online, basically. Then they will call it as a lodge. We will lodge with SC. Basically, it's the submission of this lodgement kit to the SC. So before we lodge it with the SC, of course, we have to deal with different parties. If let's say the asset, if the transaction involves any assets that we will require valuation, then of course we need to deal with the valuer. We need to get them to ready this valuation report because we need to be lodged with the SC also in the system, and we will need to comment on this report. And also, if there's any tax implication for the transaction, we will need to seek a tax advisor review. We have this opinion letter, RA, or RA is more for like their we need to, because if we have a cash flow, we need to get an RA to independently review the cash flow also to make sure all the assumptions being applied are reasonable. So everything here will be stated in their opinion letter, and we also need to comment on these letters. Okay, and also this prelim or final credit rating from credit rating from the credit rating agency. So this is also another credit rating report that we need to comment. And inside here, they will detail out the transaction structure, and then they will give a score for the credit rating for the issuer. Maybe a score, or maybe they will denote it as maybe a AAA, AA, single A, different denotion from different credit rating agency, depending on the agency itself also. And then if let's say the transaction, we have a guarantee, then of course we need to get a kafala or guarantee facility being issued to make sure that this bond is really guaranteed and governed by the terms of this kafala facility. And then if let's say just now this BNM approval is something to do, if let's say we need to issue bonds denominated in a foreign currency, we will need to get their approval first before we submit it to the SC or we lodge with the SC. And then SSC submission, this is another SSC submission, this is another submission package. But this is more for a Sharia perspective, because inside here you list down all the Sharia structure, Sharia principle. Let's say you want to issue a sukuk with a murabaha structure, we'll list down how we're going to do it, what are the steps that need to be taken, or maybe if it's a ijara, or maybe it's a wakala, depending all kind of structure. And then we will need to submit this package to the SSC, and then to get their endorsement, basically their confirmation that this Sharia structure is good to go. Then only we can proceed to lodge. And then of course we will need to prepare IM or a bridge prospectus if let's say this is right issues or with something to do with the retail side, the retail bond. And then finalization of issue. Yeah, just now I've mentioned the due diligence exercise, that we will need to make sure that due diligence has been completed, make sure everything is clean, good to go. We have commented on everything, we make sure everything is covered, there's no gap, then only we can proceed to lodge it. And right before we lodge the document, there will be a verification meeting conducted by the DDWG. Basically, we will sit down again to go through the documents, of course, to make sure there's no material omission. We need to make sure everything is true, no misleading, everything is good to go. Then only we will say it is okay, and then we will click that lodge button to submit in the system to the SC. So after we have lodged with the SC, which means if we are saying that we will lodge with SC, right, which means after we have submitted in the system, it is actually automatically deemed as approved by SC already under the Lola Guidelines. So after we have lodged it, then with the terms, everything is finalized, we will start to market the bond to the investors. So that's why we will need to prepare all these marketing or disclosure documents. We have this IM, or maybe a bridge prospectus or pricing supplement to the investors to basically to give them this kind of information, let them to assess it internally before they make a decision whether they want to subscribe for the bond or not. So if let's say we have blast out all the documents, the required documents to the investors, then they are okay to participate. Of course, everything here most likely will be done by the treasury team or the sales sides. And then they will gauge what's the market interest. If let's say they garner enough interest from the market, they will start to have this book opening or closing process. Of course, whether they want to have this book opening and closing process, it all depends on what kind of mode of issuance that the issuer choose to go. So of course the issuer, they can choose to private place to those identified investors that they have already know, or they want to do a book opening. So or they will collect all the bids from the investors, and then they will see which is the best pricing they can get, and then they will slowly tighten the book, and then they will close it with the rates that they will want. So this is the book opening and closing process. And then, of course, after everything has completed, we know who are the investors. And of course, the next thing is we will need them to provide us a black and white, which is the LOC, to make sure that they will be subscribing for the bonds. Then basically also to lock in their commitment. That's what we say. So with that, then only we are good to go to execute all the legal documents. Legal documents here, of course, Lodgement Kit, which is the PTC, mainly the PTC that we have agreed, we have lodged with Ptc. But the thing is, this Lodgement Kit or the PTC, this is not something that is legally binding. So this is just merely a terms, but to make it really presentable in the high court or make it something that is enforceable, we will need to document it into these legal documents. And our job is also to review every single of these documents to make sure all the terms and all the conditions is being captured in the documents correctly and make sure nothing is missed out. And yeah, then after we have commented everything, a few rounds of the legal documents, then after finalize it, and then we'll get all the parties to sign, then only is considered as a the terms are really fixed already lah. It's being formalized already. It can be enforceable in the high court. So after we have received the LOCs, everything, we also will get to sign another subscription agreement, another agreement which is this subscription agreement to basically to show that which are the subscribers that they will be signing, will be subscribing for this bond. And then after the marketing side is done, after the signing is done, everything, the next is not that we can issue the bond right away. It's not that simple, of course. Then, of course, the next thing is we need to meet all the CPs, which is the conditions precedent. Let's say this is what are the things that they need to be included as a CP is actually, of course, something that is decided by us as a LA and also the issuer and also the solicitor, which means this conditions precedent is something that maybe is a document or maybe an event that must be happen before the issuance can get through. So which means like, let's say the issuance will have a valuation report or we will need to get a rating, then we will include that the finalized and the final valuation report must be made available and dated when, and also a credit rating report that shows that this bond is being assigned a final credit rating of what as a CP. So they will need to make sure these documents is made available. Then only we can let them to is considered met. Then only we can allow them to proceed with the issuance. So before issuance, which means after, if let's say they have meet all the CPs listed or agreed by the parties, then only the issuer they can issue a request. This issue request is to the FA team, basically the team that it will be helping us to create all the stock codes, because they will liaise with the BNM team to get all this creation of stock code facility code done before the issuance. So yeah, they will also, the FA team, they will also need to prepare and submission the global cert to the BNM with all this stock creation. Then only they can, based on the subscription agreement, they will see who are the subscribers for the bonds. then they can only allot the stock code to subscribers, because this, we always come back to this stock code, because this stock code actually, like, it is actually representing a series or maybe a class of the issuance. So if let's say we have 100 million of total size of issuance, class A, class B, class C, 20 million, 30 million, and 50 million respectively, then which means if let's say this just one series with one maturity, let's say class A, we have a 1 year tenor mature in this year, class B, 2 years tenor mature in next year, and class C, 3 years tenor mature on the year after, it will be represented by 3 different stock codes. So when the subscribers sign for the subscription agreement, they will clearly state that which classes that they will be subscribing, and then from there, the FA, they will allot the correct stock code to them. So when we say allot this stock code, which means when we allotted this into their accounts, which means they are actually subscribed and they are holding the stock already. They are holding the bonds already. Okay. So post issuance, basically is the administrative work that we need to do. Basically, we need to generate a report, which called the post issue notice, and then we will need to lodge it with the SE. And inside here, we will need to show what are the confirmed issuance details, the final details of the issuance, and then also to notify the SE that who are the subscribers. And if let's say there's compliance of conditions subsequent, so we have 2 things here: CP, conditions precedent, which is something that we need to meet before the issuance, and conditions subsequent, which means there are also conditions that we need to meet after the issuance. Because sometimes if let's say the bonds is issued and the utilization is to maybe to refinance another financing facility, and so happen that if there's a charge of an asset under the existing facility, then of course we will need to get the bond issuance first, then only we can have the money to refinance it, discharge the existing charge assets, then only we can do the discharge everything. So usually if we have this kind of event happens, most likely we will put the discharge and everything to make sure the asset is charged again to our current, the one that we are issuing the bond, then we will set it as a condition subsequent. So because of, we know that some things that only can be done after issuance, then and we need to make sure that it is compliant to make sure the structure is intact, then we will also include it as a condition subsequent. Okay. Okay. Actually here, I have, sorry, I need to exit this mode first before I can open that file. Because just now I have explained the overall process from origination to this issuance. And as a DCM, our work most likely will get involved in this execution stage. We need to get our hands on to review every single document here. And then we also need to make sure the lodgement kit is being produced and nothing is missed out in these terms. Then only we are good to lodge with the SC. But what I'm trying to do now is I will share a sample of this lodgement kit with you all. But please let me share it first. Hang on. Okay. So basically, this is what we call a Ptc generator from SC's online system, and also something that we have launched with the SC. So I put it. Okay. So HIFG, this is one of the transactions that I've done. And basically, I'm the one who key in all these details and lodge it with the SC. You can see we have a different parts here. And of course, this PTC is not just HIFG. We have a lot of issuer in the market, and you can go to the links that I provide in the slides later. You can go into any of the websites. I mean, the website are provided, and then you key in those respective names of the issuer, then you can find their details, like the PTC. So this is basically the final launch version. So this is a CP program of up to 3 billion. This is a short-term one because this is considered a more simpler structure, quite straightforward. In this part, we will have this corporate information. We will need to list down the name, address, and then the holding, paid up share capital. All this we will have all this information during the due diligence exercise conducted by the lawyer. Basically, they will extract it from their result. Their due diligence exercise result, and then they will input all this, and then we will verify all this information. And then we have these parties to the transaction origination stage. We have the issuer, PALA, solicitors, bond trustees, and this is rated. So we have credit rating agency, and then distribution during the marketing stage. We have all the LM, and then these are the parties that will be involved. And this tender panel member, because just now I mentioned we have different mode of issuance. We will have private placement, we will have tender, we will have bulk building. So it depends on, if let's say we are going via tender, then we will have all these tender panel member together to join in the tender to bid for the CPs, this instrument here that we'll go through later. After the distribution, this will be the parties. Okay, so this is the main thing that we need to agree or negotiate or maybe structure with the client. So very straightforward, this is a 3 billion CP program, and then it's not one-time issuance, this is a program. So which means the issuer throughout, this is a 7 years facility. Throughout these 7 years, they can issue up to 3 billion CPs. So as and when they will want to tap into the capital market to issue, they can do so. Oh, sorry, this note.
Yeah.
Should I approve? Sorry. Yep.
Can I ask a question? So is it common to see like issuer they go for one-time issue?
Depending on the project they want to do. Let's say if it's just a construction, they know they want to solve, it's a construction of a building. They just know that they upfront they know how much funding they need. They will just do it one shot.
Right.
Which means they will do it as a one-off issuance lah. It depends on what's the financing needs of the client. Of course, if let's say they do one-off issuance, the approval that we will get from SC is just for that issuance only. Let's say if let's say next time they want to do again issuance, then they will need to seek for another approval again. That's the thing lah.
So do you observe more common in terms of top program rather than one-off?
Quite a lot that we are doing is actually program, because it have a very long life tenure. Then and then so long we have provided what are the purpose of utilization, then issuer they can issue as and when basically.
Right. Okay.
Yeah. So this CP program is not a SUKO, it's a conventional, so there's no Sharia principle is being involved here. Facility description, yeah, like I say, this is a program. The issuer may from time to time issue the CP so long that it is not exceed 3 billion, which is the program size. It's denominated in ringgit, 3 billion, option to upsize. Of course, if let's say in the future, the issuer thinks that this 3 billion is not enough for them, they still can have the option to upsize it maybe to 4 or 5 billion. Of course, under the Lola Guidelines, if they really choose to upsize it, it will be regarded as a fresh lodgement that we need to seek for a variation of terms. We need to get the consent or approval from the existing bondholders, basically to upsize the program. Then we need to do the whole lodgement exercise again for this particular changes. So availability period, this is basically we have a 7 years tenure for the program, but this availability period showing that from when the issuer can start to issue. But usually we will say that so long it is the CPs are met, and then they can start issue until end of the tenure. But because this is a CP, it is a short-term instrument. It can be still, until when you come to that point, 1 day before the program maturity, technically you still can issue. That's why it is a full 7 years tenure that they can basically utilize this 7 years period. If let's say it's an MTN with a minimum tenure of 1 year, of course they can just issue up to 6 years. So which means come to the year 6, you know that your bond, you need to fulfill minimum tenor of 1 year. You can't issue anymore. If let's say it is shorter, it is closer to the year 7. Okay, and of course the description will be different. In this case, it's not, because you can issue up to the last day. And this is also one of the main timing that we need to be alert, because for the first issuance for whatever CP or MTN, so long if you launch it, if you launch a lodgement kit with DSC, within 60 business days, you need to issue, you need to do your first issuance already. Otherwise, if you lapse, if the timing here, you lapse 60 business days, then you need to relaunch again. You need to do a fresh lodgement again with the issuer, and then the whole process you need to go through again, which will be very time consuming also. So usually we will gauge if let's say we know that we have enough investors commitment, we know that there are enough takers or subscribers for the bonds, and then we will make sure the first issuance will be within these 60 business days, and then before we launch it. Okay, clearing and settlement platform, this will be PayNet. This is a BNM organization, which is specifically to do all this clearing and settlement. Before this is named as MyClear, but recently they have changed their name to PayNet. Okay, mode of issuance. So here we say that this CP can be issued via tender, or on private placement, or on a bought deal, or book running or book building basis. So competitive tender, as I say, we will get a few tender panel member. We will try to source or identify who are the parties that are interested to join as a tender panel member. And as and when we want to issue this CP, we will notify them that this is our tender day. And then on that day, they will need to key in their bids in the system. Basically, they will show that they will bid, they will insert the information like how much they would like to subscribe at each rate. And then when the tender close, everything will be generated via the system, and then there will be a system generated result showing the amount and the rates that provided by the parties. And then from there, the issuer can choose they want to allocate or they want to sell the CPs, or not to sell, or to issue the CPs to who, to which investors. Of course, usually the issuer will choose those with competitive rates that offered by the investors if it's by tender. Private placement, this is upfront. We have identified who are the takers, and then we'll just agree the pricing with them, and then we'll just issue directly to them on the issuance date. Bought deal is more like underwriting. It's like, let's say for this CP, if we are really issued under a bought deal arrangement, usually the PA or LA, the investment bank that is doing the proposal, they will just spot deal the whole thing from the issuer. Let's say before issuance, I already arranged with the issuer that I will be the party who take up your papers, and then of course with more favorable rates or maybe at a deeper discount then of course we can earn a income from there, from this spot deal arrangement. And then subsequently it will be the risk, we will have risk exposure here, because we are the one who will be really subscribing for the bonds. Then subsequently, it all depends on us whether we want to sell down to the secondary market, to sell it down to other investors that we have identified. So book running, it is also something that is similar to tender, but we don't need to invite those investors to be a tender panel member, because a tender panel member is like, because this is a program, they are there for the whole tenure of the program. Whenever there's issuance, they will be notified. But this book running is more like the treasury team or the sales team. They will go to the market, and then they will let the respective investors know that there will be this issuance upcoming, and then if you are interested, please feel free to join for the book opening process. You also submit your bid, same, you submit your rates, what are the rates that you are looking at, and also the rates, of course, I'm talking about is the coupon or the profit rates, and then also of course what are the nominal value or the amount that you will be interested to take up. And then from there also, we will be tightening. We will see, let's say with 4% interest rate, there are 300 million books order that we have. And of course, if let's say the issuance size is only 100 million, there are still room to go. And then we'll try to tighten the book, which means we'll see at a lower profit rate, let's say 3.9%, how much investors are still willing to take up. Let's say it drops to 300, from 300 to 200, and then until a comfortable level, let's say the book is still covered, and then basically it's a process to help the issuer to get the best pricing, and the parties who are offering the most competitive rates, they can take up the papers lah. So this is book running. And yeah, basically these are the 4 mode of issuance that we'll be looking at, and most likely is private placement or book run, book opening or book running. Tender, and of course for this transaction, this CP, we are actually issuing via tender. So because it's what really happening right now, and every month or every few months we will have a CP issuance announced to the panel member, and then they will need to tender for the issuance lah. Okay.
So who are the tender panel member?
It depends. It can be usually also those funds or other banks lah. We will invite them, and then they will also source their investors, and how, I mean, it can be any parties lah basically, but usually are those sophisticated investors lah, those who fit the requirement of this selling restriction.
Okay.
Yeah, because I say this CPs is lodged under the Lodge and Launch framework, the Lola Guidelines. So of course we can't offer it to those retail investors. And selling restrictions here referring to those investors that we can offer this bond or CPs to. So you can try and search for the CMSA Schedule 6, 7, and 9. Basically, these are the sophisticated investors that I'm talking about. And most, I mean, they are the high net worth individuals and all those fund managers or accredited investors lah. Yep. So okay, and then this bond is of course tradable and transferable. And of course, if you want to, and if let's say the issuer they do want their bonds change hands for so many times, they can just make it as a non-tradable. So which means if it's tradable, after the primary subscribers, let's say they have signed the agreement, subscription agreement to take up the bonds, but subsequently they can still sell it down to the secondary market if it's tradable. Okay. And other regulatory approvals here, if let's say this is Dino, we want to issue it in a foreign currency, then maybe we need to get BNM, but in this case we don't. Okay. And security here, this is because a quite straightforward CP program, so we don't have any secured asset, we don't get any security for this program lah. If let's say this is an ABS, the asset-backed securities, usually we will have a list of securities that we'll be taking up. So maybe if it's a retail mall, then maybe we'll get the title, the land, and all the tenants agreement, assignment, everything as advised by the lawyer. Okay. So this is without guarantee, very straightforward. If let's say there's, then we need to state what are the terms of the guarantee provided. This is not a convertible bond, not exchangeable. There's no put, no call, very straightforward. And then these details of covenant, basically there's something that by issuing this bond, after we have issued this, we need to comply with all these covenants. It's also something that we try to impose a discipline to make sure the issuer is doing it correctly lah. So positive covenants is of course something that we want them to make sure they will need to perform, or they will need to comply. So basically we need to make sure that they keep all their license in force, everything, to do it diligently, and then carrying out all these obligation under the transaction documents here is referring to those legal documents, which usually is the program agreement, trustee, and also other maybe security documents if there's any. And yeah, basically a list of covenant that you need to make sure the issuer comply. And on a case to case basis, I mean, it can be different. And if let's say we want to strengthen or make sure that we have more discipline imposed on the issuer, maybe we'll add on something differently into this list. And of course, everything here, this is just a PTC. Later on, it will be translated or it will be moved or documented into the transaction documents, which make it legally binding to the parties. So negative covenants, something that they can't do so long the program is still alive. So we need to make sure that they don't change the nature of scope of their business. So nothing, not to dispose assets, equivalent to how much, unless they have if let's say the parties or the issuer, they will need to do something that is non-compliance with this, or maybe which is maybe contradict with these covenants, they will need to get the approvals or consent from the bondholders after issuance. If let's say the bondholders think that it is okay for them and they give the approval, then of course it will be a variation exercise. We need to revise the terms and then we'll need to go through the lodgement process again. But just that without the marketing side, because the bonds is already placed out to the market. Financial covenants.
Sorry, Chia, who is going to lead the negotiation? Let's say the issuer, they can't fulfill some of the covenant.
Of course, it depends. If let's say, okay, there are two things here. If let's say the issuer haven't do anything, but they know that if they want to do it, it will be in breach of the covenants, then they will need to seek for approval. If let's say they breach it accidentally, or if you say that it is a technical breach, then most likely it will lead to a trigger event or a EOD, event of default. So we will see how severe is the situation, or maybe we can ask for a remedy period for it, or maybe it will be just a straight direct EOD declaration from the trustee or from the holders. It depends.
So is it the trustee who monitor this?
Yeah, of course. Yeah, because all this will be documented into a trustee. So the trustee is between the issuer and the sukuk trustee. So sukuk trustee is on behalf of the sukuk holders. They will need to also monitor all this to make sure it's compliant.
Okay.
And of course, if there's anything that they will need to change, they will need to go back to the bondholders, which means they will need to approve the sukuk trustee to get them to inform the holders. Okay. Financial covenants, again, this is a very strict structure. We don't have any financial covenants that we need them to meet. But most likely, if let's say there is any, or maybe let's say the credit rating agency, they want to make sure that they have enough buffer, or they have enough resource to pay off their coupon, they may introduce a FSCR, finance service cover ratio, maybe of 1.5 or 1.7 times, depending on what's the rating that we are trying to achieve So there will be different level of ratio for that. So information covenants also, the issuer, they will need to furnish this information. Firstly, maybe the FS, the financial statement, and if let's say there's anything that happened, they will need to notify, then they will need to do so. They will need to furnish it to the bond trustee or the sukuk trustee to inform them, or maybe the credit rating agency as well. So Destinator accounts, we don't have here. If let's say if it's an ABS transaction, and we need to make sure that the cash flow generated from the asset itself is really used to service the bond itself, then we'll make sure that there's a designated accounts being open to ring fence all the cash flow, to make sure all the cash flow generated from the underlying assets is trapped in the system, to make sure it's really used for the coupon servicing, or maybe the profit, the principal payment. So if that's the case, then we will open these accounts but this one, no. It's just for the issuer's working cap requirement, so nothing much have been imposed. So this credit rating agency, the credit rating details, they have given this P1 rating to the bonds, the CP, and also this P1 applies to the whole 3 billion size. So whenever they issue, we can say that it is P1 rated. P1 is the highest rating for for RAMs, short-term instrument. So yeah, this is the CPs that also mentioned just now. That this is a whole list of things that the issuer will need to make available or to achieve before they can issue the bond or the CPs. So we'll have a legal opinion. We'll have this letter from the lawyer saying that all CPs are met, and then some corporate documents and evidence that this transaction has been lodged with the SC, and all the legal docs has been signed and stamped. And because this is rated, we'll need to make sure that it's being, the rating is being provided before issuance, and then some company search and also winding up search to make sure everything is clean. No one is not being winding up, and also it's not bankrupt. And then the due diligence report and this account. Basically, this trustee reimbursement account is a requirement under the guidelines that the issuer will need to open one to make sure this amount is deposited into the account. In the event, if let's say there's EOD, event of default, then the trustee, they can use this amount to basically to pay off the expenses that they incurred. And reps and warranties that need to be provided by the issuer to make sure they really have the power to enter into the legal docs and they are really validly in existence, everything. If let's say any of the item here is false or is not true, which means it will be an EOD already. They make a misrep, and then it will be straight away an EOD situation. And of course, depending on how severe it is, if it can be remedy, of course, maybe there will be a remedy period provided, or maybe the sukuk holders, if they are agree to it, then they can still remedy. Otherwise, it can be straight an EOD situation if let's say the sukuk holders, they choose to declare after they have gotten 75% of the votes via a special resolution. So this is a list of events of default. If let's say anything happen, it will be an EOD, and then which means the whole structure will collapse. And then if let's say there's any security, of course, we'll enforce it, and then we'll get the money back and then pay back the sukuk holders. So yeah, these are the events. Governing laws, it will be based on Malaysian laws. Provisional buyback, of course, after issuance, we provide them, we allow them to buy back. But of course, if let's say if it's a related corporate or related entities, after they are bought back, it must be cancelled. Because otherwise, if anything that we need the shareholders, the sukuk holders to vote, related parties should not be included in this case. Also, we'll provide this early redemption option so they can early redeem it. Let's say we issue for MTN, because this is short-term notes, it's very unlikely that it will be early redeemed. But if let's say it's a MTN or maybe an ABS MTN, let's say the tenure is 3 years, but if you provide this provision, then they may allow to early redeem the bond prior to 3 years, which is the maturity of the bonds. Maybe in year 2 or year 1, they still can early redeem it, provided at a price that agreed by the sukuk holders or the bond holders as well. Voting. Of course, these are not exhaustive, because the more details will be, everything will be documented into the transaction documents, that one. But of course, that one I cannot show, because those are private and confidential. I can only show whatever is publicly available, which is this Ptc. So no permitted investment. Of course, if let's say they want it, if the issuer they want it, of course we will provide, which means if they have monies, also depending, because if let's say the designated accounts, we have, if let's say the issuer they did open some accounts and then there's some excess cash in the accounts, we will still allow them to do FD placement, provided if with those licensed institution acceptable to us. We'll list it down here if let's say there's any, but for this case, no. Tariff, this one is more for sukuk a sukuk lah. But since this is conventional, so it's not applicable. Yeah, so basically this sums up the PTC of a normal bond. So when we say we need to prepare the lodgement kit, these are the things that we need to agree and nego with the issuer and respective parties to arrive to have the finalized final terms before we lodge it with the SE. And this format is the online generated format by the SE after we have lodged it in the system. And this can be found in the SC website or maybe the other links that I already provide in the slides. Then yeah, you can still search for other issuer if you want to know more. But for illustration purpose, this one is a simpler structure that we can explain it in a more clearer, at least a beginner level for everyone, easier to understand. Yeah, so basically this is a PTC. Maybe let me come back to the slides here. So, okay. So the lodgement kit just now, we are in pre-lodgement approval this stage. We need to get it done. So after that, we get everything, issuance, we'll complete a PIN. And then these are the links that I've provided. Basically, here, these SC guidelines, if you manage to open it, you should have, it will direct you to the SC websites, the official SC websites. And inside there, there's a lot of guidelines that you need to, of course, it can be found. And most of the guidelines that you need to be familiar with it. And then, yeah, in order to give the appropriate advice to the client. And then FAST website, this is basically like a Bursa website, but it's more for bond. It will show with the stock code, details everything. If you know the stock code of the issuance, if you know the name of the issuer and you type it to search it, and then you can get the result in this website. VIX is also another bond information website, exchange website. So you can find the PTC, IM, or the related documents in this website. Also provided if you know the issuer's name and the relevant details, you can still search it. Yeah, and I think finally, yeah, this is the FAQs that usually I've received from my friends or maybe from other parties. Usually what I'm doing in HIB, of course, I'm a DCM guy, and my main responsibilities is to make sure this execution stage, everything from origination to issuance. I need to structure, I need to draft the PTC, liaise with the relevant parties to make sure everything get through, and then finally to make it issue in the market. And challenges faced in performing your task. As a DCM representative, right? I mean, my job here, of course, if let's say we want to get the issuance, if you look at this process, it seems very easy, but because there's a lot of negotiations you need to take place with the different parties. If you can see, we have credit rating agency, we have the kafala provider, we have the regulators, we have the valuer, we have a lot of parties that we need to deal with, the tax and the reporting account. Then which means everyone will have their own deliverables, and we are the central role. We need to make sure everyone meet the timeline to deliver whatever they should deliver to ensure the issuance is on time. Because if let's say that bond issuance is to refinance a existing loan, and if let's say we target the issuance date and then we can't make it, which means the issuer will fail to repay their loan to refinance. So you cause a default in their existing financing because they don't have enough funding to repay their loan. So timing is very important here. So the main challenges that we will be facing is to meet the timeline, and throughout the period, of course, we need to monitor all the key milestones and key deliverables and make sure that everything is in place lah. And also because the negotiation, we will need to nego a lot with different parties. And what are the skill sets needed to become an investment banker? Of course, investment banker, it depends on which department that you wish to work in. If it's for something like us, DCM or ECM equity, if you want to be join equity market to work on IPO exercise, you still need to get yourself very familiar with the guidelines, compliance, and of course, your financial knowledge, your basic must be strong enough, because sometimes we need to be fast. Otherwise, if you can't get you can't get the idea, or can't get the whole structure, or the arrangement, you kind of like a bit hard to know the whole picture, and you can't execute that deal uh in a proper manner lah, basically. So for me, for a fresh grad or beginner level skill set, I think if you can get yourself familiar with the guidelines, as I mentioned, like if you really interested in bond issuance, you know you need to make sure that you're really familiar with the Lola guidelines and other whatever guidelines in this SC in this SC website, which means we have a lot of guidelines here. And yeah, and out of 10, you like at least you need to master 8 or 9 out of them. You need to make sure that everything is in compliance. And skill set, yeah, as your basic financial knowledge, you need to be there. Yep. And also, of course, you need to be passionate enough to learn something new. You can't just stop whatever that it's not like after you have graduated and then with whatever that you have learned in university is enough. Of course, if you really master all the knowledge, it will be good, and it's really useful also. Like I mentioned, I have attended the financial modeling class, and then after that I mastered some skills. I can do the cash flow, everything, projection, modeling. If you can master it, of course it will be good, but there's still a lot more that need to be learned, basically. Yep. So I think I'm not sure did I miss out anything, Dr. Wong? I think
Yeah,
the
good.
main one, the Lodgement Kit, I already go through with
Yep.
everyone. Yeah, I think that's the main part. Yep. Maybe I'll go to the Q&A, or maybe if there's any question
Yes.
from the floor.
Yeah, Chiao. Okay. Good. Okay, Chiao has given us a very detailed talk. Okay, on bond raising process in Malaysia. Okay. In fact, Chiao. Okay, you have spent more than 2 hours. Okay.
Oh,
I
sorry.
yeah.
I thought without
Yeah.
seeing the
Good.
slide.
So it's very detailed. So I think we can take. Can you see the question in the chat box, Chiao?
Yep, I think the first one is, what advice would you tell, or things that
Yeah.
you wish to know
This I
when you
think this is the
first?
only question that we have, right?
Yeah, of course,
Maybe.
if I would know, I will really start to read all those guidelines first. Because when I
Okay.
first entered this department, I know nothing on the guidelines. Yep.
Mm,
So I wish I know those guidelines earlier lah, and then yeah,
right.
can easier to learn also. Yep. Is there any common misunderstanding you have noticed when it comes to your bond in your years of experience? Is there any common misunderstanding? I'm not sure what exactly that this question is
Me too. I
trying.
also not very sure. Never mind, we skip that second. Go to the third one.
How relevant does the things you have learned in university? Yeah, as I mentioned, financial modeling, corporate finance, those basic finance knowledge that we need. Is there any subject class that you have? Yeah, of course, definitely financial modeling. If
Yeah.
you're really interested to build cash flow, or maybe in the future I mean it's your work requirement also, you need to get that skill. And also, of
Okay.
course, guidelines, because yeah, currently I think in university the syllabus doesn't really cover much regulations. So yeah, maybe you can read on those as additional knowledge for yourself.
Okay.
Mm. And what's the range of fees received by oh, of course, this one case to case basis, and of course I can't disclose how much that we are getting for for a transaction. But of course, what I can say is, because we are taking different roles for a transaction, let's say a PA, LA, and also LM, And basically for structuring the deals, we receive a arranger fee. Okay, but of course the fee is subject to the client, how much they agree on. And then subsequently after, if let's say we are successfully placing out the bonds to the market or what, there will be another placement fees that we will do with the client or we can be agreed on. So basically arranger fee, placement fee, or maybe there's also some additional kind of fees depending on the nature of the transaction. Yeah. But
So
how much is
this
it?
type of fees, is it I mean based on the size as a percentage of the deal size, or is it something fixed?
It can be. Usually, I mean, arranger, that one maybe just a nominal amount that will be determined. Maybe it's not depending on the size. It's really depending on how the client nego with
Okay.
our boss. But
Mm.
placement fee, yes, it depends on, most likely it depends on the amount that we manage to place out to the investors. Maybe a few percentage, how many basis point on the placement amount. Yep.
Okay.
Okay, so ABS, yep, a bond, basically a asset backed MTN. The underlying asset can be malls, can be properties, receivables, which can generate cash flows. Yes. Book opening, closing. I'm not sure what is being stated in the textbook, but yeah, roughly is the process of tightening and getting the best pricing for the issuer.
Oh, that's the comment from me.
Yeah.
The statement from me.
Mm.
So yeah. So do you have any more question from your side? From the chat here, I don't see any more questions. Yeah.
Yeah, I don't think so. But this one,
Okay.
the last one is oh, okay. But I think I received a PM.
Yes, because some in today's webinars, okay, they only can send privately, okay. So maybe some of the questions reaching you.
Yeah, I saw
You
that.
have
Okay.
that? Mm.
Okay, just so I mean the chat here show that, I mean, later can you show back slide 3, the organization structure? So okay,
Oh.
I'll just go back to slide 3. This is usually the structure that we are talking about lah. We have investment banking division, we have stockbroking division, and I'm in debt markets, DCM team. Yeah, we have different business units here. We have treasury, equity, debt, and client coverage. Yep, different business unit involved in different stage of the process lah, I would say. Sales team from the treasury more on the distribution, the issuance side, and then us is the execution, origination, maybe client coverage, because they are the one who actively seeking I mean business from the client. Yeah, prospective client. Yes.
That's all, Chia?
Yeah, that's all from me. So
Okay.
I'm not sure whether there's anything that you want to know more, or yeah.
Yeah. Actually, we are running out of time, okay? So
Okay.
the webinar is meant for 2 hours. So
Okay.
you have 2 hours OT, you know, additional 20 minutes. So
Okay.
thanks a lot. Okay, thanks a lot.
Mhm.
So
Okay.
I want to we have something for you. Okay, let me share my screen. Right. So can you see the certificate?
Yep.
So on behalf of the Dean of School of Economics, Finance and Banking, okay, we thank for your time, Chiao, okay, to prepare, okay, this insightful details, okay, talk on bond raising process in Malaysia, okay. So this is your first talk, okay. So I hope it's not going to be the last, okay. So maybe 2-3 years down the road, okay, I'm going to invite you again.
I see.
So by the time I suppose you have been promoted to manager, so
Hopefully.
you will come back again,
Yeah.
okay, to share with our student. So so our audience, maybe we all can give a virtuous, okay, round of applause, okay, to our speakers, okay. So today is 1st of May, supposed to be a public holidays, but Chiao has willing to spend his time, okay, to prepare this 2 hours talk, okay, for all of us, okay. So I also take the opportunity to thank my colleague, okay, Sukri. Sukri is behind the scene, so he's helping
Thank you.
us with the poster and all, you know, setting up all this, okay. Right. So with that, okay, we are done with today webinar. So perhaps Chiao, is it okay if say they have some question? Okay, some of them may aspire to become investment banker. Can they contact you privately? Is it okay for you to share your email? So
Sure.
just in case they want to email, you can type
okay.
into the chat box.
Maybe I'll just give my contact lah. I mean, my mobile contact will be better, straightforward. It will be
Okay.
easier
Right.
to reach me.
Yep. So guys, if any of you you aspire to become investment bankers, okay, right? So you can contact Chiao. So he has just typed his handphone numbers, okay, in the chat box, okay, in the chat box, right? So with that, okay, we are done with today webinars, okay. So thank you all, okay. Thanks for attending today webinars, okay. So thanks to I know my colleague Dr. Hanita is here as well, and also Prof. Yus, okay, Professor Yusnida, okay. So they are with us, okay. So right, so thanks again, Chiao. Thank you.
Okay. Thank
Thanks
you,
for your
everyone.
time. Okay.
Thanks for
Thank
having
you,
me here.
Chiao.
Okay,
Thank you.
Thanks.
Okay. So okay, bye bye everyone. Okay. So yeah, we stop here. Okay, bye bye.
Okay, thank you.
Right.
See you all.